Hey traders, welcome to Master the Market, where we help you become a market master. In today's video, I'm going to be breaking down the exact strategy that I used to make a $6,743 profit from swing trading the stock UNH. I'm also going to be sharing with you some of the biggest tips that I use with every single swing trade that I place. These are going to be a complete game changer for a lot of new traders, so make sure to stay tuned and let's get right into the video. So first and foremost, like all of my swing trades, I post about them in real time in the Market Master group so that our team of traders can follow along with these trades as well. If you're interested in trading these stocks just like I am, make sure to join us in the Market Master group using that link down below in the description. And we can see that the trade plans here for this swing trade were that I was taking a starter position here today for a swing trade, pure speculation, but it's getting extremely oversold here in the 250s. And we're seeing a massive spike in volume, indicating potential seller exhaustion. In terms of risk and reward, this is a very favorable entry area. I'll plan to continue scaling in a bit more if the lows hold over the next few trading days. Goal is to sell some back at 300 plus. And at the time, it was trading right around 260. That was the exact point in time that I actually took my starter position in this trade as well. So if we look at the daily chart here, we can see that obviously a massive sell-off here from around $600 per share down to under $300 per share in the span of a couple of weeks really. And obviously that led to a very oversold RSI. The RSI at the lowest point ended up being about 12, which for such a large cap, well-known stock, that is pretty unheard of and very rare. So when you get those sell-offs and you get those extremely oversold levels on the RSI, that is where those seller exhaustion points can start to come into play, and you can start to find those short-term reversals off of that oversold level. In other words, you start to get what is known as capitulation. So, to look at the actual definition of capitulation, in the stock market, this is going to refer to a period of panic selling where investors, fearing further losses, aggressively sell their holdings, causing a sharp and sudden drop in prices. This is essentially a surrender by investors giving up on their positions and the possibility of future gains. And when this capitulation happens, all of that volume and that selling pressure, of course, is going to lead to a steep decline in the prices, often creating a short-term low. So this is where the opportunity is going to come into play, and you can look for that extreme oversold level, and you can start to buy into it, risking then off of that short-term low. And that's exactly what I did with UNH. So to take a look at the intraday chart from when I actually started to scale into this trade, this is the 5-minute chart of that extremely oversold day. And we can see it started off with a sell-off at the open. We then hit this low down here of 248.88, and we start to bounce back up a bit. So right around that 260 area is when I posted that message in the Market Master group for a swing trade. I then took a 100 share starter position right at about $260. And the key here is that I'm not buying into a stock that's selling off further and further and further, even if it looks like it's oversold and even if it looks like there might be some potential capitulation. You want to wait for a short-term reversal setup. And that is the key here for any successful swing trade, because you don't want to be blindly buying in as the stock is moving lower and lower. So that bullish reversal can look like something like a higher low forming on the 5-minute chart. Maybe it could be a reclaim of the VWAP. Maybe it can be a move above the previous day's highs. Whatever it may be for you, that is what you want to look for in order to get into this oversold setup then for a bullish reversal. And for me, once I saw that this was starting to break out of this short-term morning downtrend, we go ahead and just draw this here on the chart, that is where I started to look to scale into a position. So it started to break out of this pattern a bit. We started to see buyers stepping up on the level 2, and it was pushing up into the VWAP. I bought 100 shares at that point in time, and the key here is that I knew where I was going to be risking off of for this trade. I was risking off of those morning lows, so I was risking down to about 249 or so. In other words, I was risking about $11 per share from my entry at 260. So my overall risk on this trade was about $1,100. And I actually ended up making over 6 times that. And in just a moment, I'm going to share with you how I was able to really maximize my returns on this trade. But we can see that from that entry point, it starts to kind of hold over the VWAP and climb a bit higher. Realistically, this could have very easily turned into a day trade because of how well it closed the day. But I knew that because of how oversold that daily chart was, there was going to be some really great potential for a continuation to the upside over the next couple of days and even the next couple of weeks. Now, the following day, it gaps up a bit. We then start to sell back off a bit there in the middle of the day. Remember, my entry price was right around $260 per share. So even at the lowest point here of this pullback at about $269, I was still up about $900 in profits on the trade. And from there, we can see it starts to bounce back up. Again, it starts to reclaim the VWAP. And right then, when it started to reclaim the VWAP at about $280 per share, I added 100 more shares into this trade. So now I had a total of 200 shares at an average cost of just about $271. And adding those extra 100 shares was really a very crucial element to maximizing my returns on this trade. A lot of traders think that the lower a stock goes, the more you should add into it, because that's going to better improve your average cost on the trade. But the simple fact of the matter is that all you're doing in that case is throwing money into a losing position. If you add into your winning position, even though it's going to technically negatively affect your average cost, what you're really doing is you're putting more money into a stock that has already proven to be right and has already proven to be a profitable trade. To give you a quick analogy, I heard someone else talk about this at some point in time, but if you think about it in terms of poker, if you were to bet the same amount with every single hand of poker that you were dealt, you're going to lose your money pretty quickly because poker relies on betting big when the odds are in your favor and when you have a strong hand. Really, the same concept applies to the stock market as well. You want to be betting strong when the odds are in your favor and when the trend in the market is moving in your favor. And the best way to do that, in my opinion, is to add into a winning trade. So very quickly, if we jump back over here to the initial trade plans for this swing trade, I did say that my goal was to sell some back at 300 plus. We can see then that the following trading day, this is then going to be the following Monday, we have a gap up here to over $300. And because of that, I already met my target for this trade. I sold 100 of my 200 shares and I locked in half of my profits. The stock then goes to about 325, 326, I believe. And then it starts to sell back off to the downside. Today it is moving lower, and today I actually locked in the rest of my profits on this trade. It's back down to about 304 at the time, and that is where I sold my initial 100 shares, and now today I sold the last of my 100 shares at that same price. Obviously I missed out on some potential profits by not selling up at 320, but hindsight is 2020. And, this still ended up being a really solid swing trade, one of my best swing trades over the past year. So I just wanted to make this video to recap my thought process on this trade. Simply put, when you're dealing with an oversold stock, you want to make sure that it's at extremely oversold levels. You want to wait for some kind of bullish reversal indicator. And then your goal should be to start off with a small position and add into that trade only once the price action has confirmed your thought process for the trade. And that was exactly the blueprint that I used for this $6,743 profit in UNH. Hopefully you found some value in this video, and if you did, please make sure to give it a like and subscribe to the channel. And again, if you want to hear about these stocks that I'm swing trading in real time, all of them are going to be shared in the Market Master group. There's going to be a link down below in the description for you to get signed up. Anyway, thank you again for watching. I hope you enjoyed, and good luck with your trading.